as we remain on the verge of breaching the debt ceiling, whether it's the May 26th date, whether it's the June 1st date, or whether it's this X date that we're looking at, we know this is a major concern for the broader averages. However, what I'm talking about is well known. We know that we're coming up on this debt ceiling. We know that the authorized measures available to keep the government from exhausting its borrowing room under the current debt limit is narrowing, right? I think we were at 110 about a week ago. We're down to 88 billion now. The bottom line is, we know this. If I'm talking about this, I'm always going to presume any factoid like this is something that's known by the broader averages, and in the case of the debt ceiling, it's talked about incessantly. And yet, all right, here's where it gets interesting. And yet, Amazon is breaking out through what was a difficult 200 exponential moving average resistance. And it's in a fresh uptrend. Amongst all of this news, Meta continues to move higher. Google, a trade that we had and alerted in the Sector Secrets Mastery with a 108 call back on the 8th and the 10th here of the month, right? It continues to be moving higher. So there's some push-pull here, right? If we're supposed to be freaking out, why are these stocks making higher highs? If we're supposed to be worried about this, why is there still support, especially in tech? So yes, what I've just shown everybody are a number of stocks that would be under the umbrella of the NASDAQ, that would be under the umbrella of the XLC communication ETF, the XLY consumer discretionary, and of course the all-important XLK, heavily weighted in the Dow, the S&P, and the NAS. These are all in, at this point, bullish territory or just even established uptrends. So what's the disconnect here? The disconnect might be of the, and no exaggeration, 6 dozen times that we've come up against the debt ceiling, and it's actually a number higher than that, we've usually found a way to push through. Legislation happens, Congress gets its act together. So I'm not going to make this a political conversation because, look, until there are futures on the Senate and Congress, there's no sense in getting into the politics, but rather the concern about the date under which the borrowing room limit is reached. Okay. We all know this. These are the stocks that are outperforming. Now, let's step back for a moment to a couple names we talked about last week. So last week I said, hey, gang, get ready for moves higher in Meta, carrying the XLC higher, and also in Amazon. And Amazon's move was probably the most impressive in that XLY, consumer discretionary, has been a lagging part of the NASDAQ. It's one of the top 3 sectors weighted within the NASDAQ futures. Amazon's the number 1 stock. And I said, hey, look, Amazon's getting ready to bust up through this 200 propulsion. And here it is. When we cross the threshold of a 200, this is the 200 exponential moving average crossing with an 8 exponential moving average, we cross a threshold like that, there is oftentimes going to be buy stops, bullish momentum on the other side of it, and this is what we're talking about. So again, I have a hard time talking about the sky is falling in this environment because a story is one thing, taking a look at some of the strength, most especially in tech and those tech-related sectors, is quite another. All right, so then let's look at it from a slightly different point of view because we've been talking about tech, we've been trading tech, but what about some other corners of the market? Starting off with, and let's talk about interest yielding products or products related to that. HYG and TLT, or HYG, and from the futures perspective, the ZB futures, the long bond. All right. So let's talk about what's going on here because there's a slightly different story happening here. So let's kind of temper this tech optimism with what yields are telling us and what high corporate yield is telling us. All right, HYG. HYG is not in a downtrend, and the closer the slow stochastic gets, and let me show you what I'm looking for. I'm looking for a slow stochastic reading near the low. Okay, this right here, this lower line is the 20 line of a slow stochastic. By the way, I'm using 80-20 as the 2 levels, 80 to the upside, 20. We have the 50 here in the middle. Pretty classic slow stochastic arrangement. 21K 3D. This is where things get a little different because I use a very slow stochastic, right? We slow that way down with a 21 period K and a 3 period D. All right. The closer we get to this, the closer we are in a neutral environment, oversold. Where would I be looking for support? Daily price movement range, 75.50. HYG is looking like a buy in that area. So I'd like to see it come down a little bit more before I can buy HYG. What is HYG reflecting? This is risk appetite, gang. If this is moving lower, risk appetite sort of at the upper end of riskier assets. This is high yield corporates, riskier bonds, right? They yield more, but they're risky. They reflect a certain amount of risk appetite, and we're not seeing that right now. Another place we're not seeing risk appetite is in yields. If TLT or the ZB futures are moving higher, an uptrend or strength on these, that means we have lower yields. Lower yields are better for stocks to move higher. ZB is doing what I want HYG to eventually do. I would prefer that the slow stochastic be down here at the low, but it's awful close. So this is not exactly an oversold, but it's in the neighborhood, right? It's maybe even on the street. And that's what I'm looking for, right? It may not be at the actual address that I'd like, but it sure is awful close. Here's my daily price movement range. So all my cards on the table, we sent out an alert in the Sector Secrets Mastery and in the futures room for a long position in the ZBM, the June contract of the long bond, and or the TLT. Now, I want traders to remember, once we go overnight, the initial margin requirement gets pretty beefy. This is about a $4,600 initial margin requirement to take ZB for a swing, meaning an overnight position. And that may not be palatable or even affordable for a lot of traders. So what I recommend is, hey, if ZB has a setup and you want to get long, but it's a little too spendy, think about calls on ZB, or even better, scale into calls in the TLT ETF. It's the same trade, but you can choose your own adventure into risk and to cost of trade. So this is what I'm looking at, gang. Yes, on one hand, we have this imminent debt ceiling conversation happening, and on the other hand, we have tech stocks that are relative outperformers, and we have HYG and ZB closing in on levels of support for potential buys, which, if they were to move higher off these levels, would be indicative of lower yields when it comes to ZB and risk appetite when it comes to HYG. These are names that I don't want to ignore, and frankly, it's tough to bet against these right now. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.